The UK jobs market weakens, paving the way for a November Bank of England cut. FOMC members are talking more about a 25 basis point cut by the Fed in November. New Zealand inflation is set to return to the Reserve Bank's target band, and we have rate decisions today in Thailand, Indonesia and the Philippines. That's coming up in our 5 Things in 5 Minutes. And then in our bonus deep dive interview, ANZ Economist Maddy Dunk discusses signs that Australia's housing market is starting to cool, particularly in Melbourne.
If you look at Melbourne over the last few years, supply has been stronger. So they added to their dwelling stock at a faster pace than other capital cities in the previous few years, and that's outpaced population growth.
But first in 5 and 5 with ANZ. Global stocks were weaker overnight as uncertainty grew over the size of China's stimulus package. At 4 a.m. Sydney-Melbourne time, the S&P 500 was down 0.35%, while China's CSI 300 index closed yesterday down 2.6%. We've also seen in recent days a number of comments from FOMC members supporting a 25 basis point cut by the Fed in November rather than 50. Meanwhile, in the UK, payroll employment fell 15,000 in August, and the number of job vacancies were also down in Q3. ANZ head of G3 Economics Brian Martin says that shows labour demand and supply are coming back into balance.
And that is reflected in the softening that we're seeing in wage growth. The headline measure of wages, which includes bonuses, fell to 3.8% year on year from 4.1%. And the underlying measure, which excludes bonuses, fell to 4.9% from 5.1%. Both those point to an easing in wage pressures. That should lead to an easing in service price inflation going forward. And we think the data are consistent with the Bank of England cutting interest rates 25 basis points when it meets next on the 7th of November.
The Australian dollar was trading down 0.28% at 67.06 US cents at 4 a.m. Sydney-Melbourne time. The Kiwi was down 0.21% at 60.81 US cents. The US dollar index was flat. Number 2, annual inflation in New Zealand should fall back into the Reserve Bank's 1 to 3% target band for the first time since the start of 2021. ANZ economist Henry Russell and the Reserve Bank are forecasting 2.3% in Q3, down from 3.3% in Q2. However, Henry says non-tradable inflation, forecast at 5.2%, still poses a bit of a headache.
There are still some concerning elements that are masking progress to some extent. Things like local authority rates, which are set to post their biggest increase since 1987 and contribute a whopping 0.4 percentage points to quarterly headline inflation in Q3. So for context, that's almost half of the total increase we have penciled in. Then there are elements, things like insurance as well, which continues to print strong. The challenge for the Reserve Bank is monetary policy settings today aren't able to affect those components. And so ultimately, it's a bit of a waiting game for the Reserve Bank.
Number 3, New Zealand house prices measured by the Real Estate Institute rose 0.3% in September, the first lift since April. Henry says there are still signs, though, of sluggishness in the market. Seasonally adjusted sales volumes fell 2.3%.
I think the reason we haven't seen a pickup in sales volumes to date is probably more of a timing story than people waiting on the sidelines. Interest rates have fallen a long way, but it takes a while. Buying a house is a big decision, and it will take people a while to get set up to do that, to find the right place, to secure finance. And so it really is early days on that front, and we do expect to see a pickup in activity over the coming months as we head further into spring.
Number 4, 3 rate decisions in Asia today. Thailand is expected to hold at 2.5% and Indonesia at 6%, but it's the Philippines where there could be some action. ANZ economist Arindam Chakraborty says a 25 basis point cut to 6% is expected.
Headline inflation has eased significantly in September, and falling rice prices in the international market combined with decreased import tariffs on rice point towards a further softening of inflation in the coming months. The BSP had previously signaled a 25 basis point rate cut at its meeting in October. We believe the ongoing weakness in private consumption and favorable inflation data justifies an interest rate cut at its meeting today.
Number 5. ANZ Roy Morgan Australian consumer confidence was flat last week, although confidence among renters kept rising. ANZ economist Maddy Dunk says overall, concerns about financial conditions were offset by stronger confidence in the economic outlook.
If you look at the 4-week moving average of short-term and medium-term economic confidence, so that's confidence about the economy in the next 12 months and then the next 5 years, both of those sub-indices are at a 6-month high at the moment. So that's offsetting some of that softness that we've seen in the financial conditions indices in the last week.
Maddy Dunk there, who we stay with for our bonus deep dive interview, looking at why Australia's housing market has been cooling recently, particularly in Melbourne.
So we're seeing signs that Australia's housing market is cooling. We know that there's been very strong growth over the last year or so, but it does seem like momentum is slowing. If you look at things like auction clearance rates, they're pretty sluggish. Forward indicators like the median time on the market have been rising, and new listings are also trending upwards. And we're seeing that new listings are now about 25% higher than their 5-year average for this time of year. All signs that there is some softness creeping into the market.
Why do you think that's the case? Because there's certainly plenty of people wanting homes and not enough homes.
Yes, I think that we've had this supply-demand imbalance for quite some time. And in some parts of the country, it's very extreme. So if you look at Perth, for example, we're seeing that housing prices there are up 18%. On the flip side, though, places like Melbourne have seen housing prices go backwards because they've got the opposite problem to WA, where there is more supply than there is demand. And ultimately, there has been this period of very strong growth. It does seem like there is a rebalancing going on, and you're seeing signs demand in particular is cooling. On the supply side, though, there is still a number of constraints there going on. Things like approvals are very low right now. Approvals on a per person basis are around record lows. So still many supply constraints, but signs demand is cooling off a bit.
So what are you expecting for prices in 2024 and 2025?
Well, it's very different across the country. And I think that that's one of the important things when we're thinking about the housing market is that, yes, we talk about the national number, and nationally we're expecting that capital city housing prices will rise 7.3% this year and 5.5% next year. But the regional picture is so diverse. So Perth, we're expecting prices there to be up 25% this year. Adelaide and Brisbane, markets where we've also seen a lot of strength, we're expecting that those prices will be up 15% at the end of the year. And then places like Melbourne, Hobart, we're expecting that prices will actually go backwards this year. In Melbourne, we think house prices will fall 1.7% in 2024, but we do expect a bit of a recovery in 2025.
Yeah, Melbourne, obviously one of the two biggest cities and plenty of population growth, plenty of jobs. What's different in Melbourne?
I think a lot of it comes down to the supply story. We talked about supply and demand. And if you look at Melbourne over the last few years, supply has been stronger. So they added to their dwelling stock at a faster pace than other capital cities in the previous few years. And that's outpaced population growth. If we think about the rate of growth in population versus dwelling stock, we've got this huge gap emerge where Melbourne have added to their dwelling stock at a much faster rate than they've actually added to the population. And that's flowing through into more timely indicators. So things like sales volumes versus new listings. We're seeing that new listings aren't being absorbed in the Melbourne market, whereas in other parts of the country, they are being absorbed. So really, I think it's all about that supply story in Melbourne.
Maddy Dunk there. And tomorrow, Maddy looks at the effect that changing household sizes are having on Australia's housing market. I'm Alex Tarrant, standing in for Bernard Hickey, who is away this week on family leave. That was 5 and 5 with ANZ for Wednesday, October the 16th. Catch you tomorrow with what today's inflation data might mean for the Reserve Bank of New Zealand.
This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.